So here is Mayor Valensky on your weekly podcast on Sunday, the 27th of July. We're going to be discussing as follows. Who will win the interest rate war? Will it be Donald Trump or will it be Jerome Powell of the Fed? And where is the US economy going from here? So let's kick off. There has been some sparring going on between Trump and Jerome Powell. Jerome Powell, we have to understand, is an economist, he's intelligent, he's refined, reserved, understands how the economy works overall. And Trump is a businessman, he's a bit of a rough individual, doesn't always think before he speaks, and makes sometimes outlandish or often outlandish statements and then has to walk them back. So what's happened recently, or been going on for the last few months, is that Trump wants interest rates to fall. Now, he wants them to fall for several reasons. Number one, to get the economy going. Number two, to reduce the overall mortgage and loan cost of the individuals in the US, which would be a campaign promise. And number three, which could be actually number one, but I'm just stating it as number three, is that by getting interest rates to fall, he will essentially be reducing the interest rate burden, the cost of the US in paying interest on their loans. So remember, the US has at least now 37 trillion, some say 39 trillion of debt. And that debt has to be either fully repaid or the interest rate, the interest, which is the yield on those bonds, needs to be paid out to investors and bond holders. Now, the way to do that is through income and revenue brought into the US government. However, interest rates, as you're well aware, have jumped up. And Joe Biden and Kamala Harris administration did something very strange. They went and issued bonds for a loan period of 2 to 3 years, which is unusual because if you're borrowing money as a government, then you want as long dated loans as possible, which would normally mean 20 to 30 years. So they might have done the 2 to 3 year loans in order to put Trump into trouble in the event that he won the presidency, which he did. And guess what? Now he's in trouble because those bonds have to be refinanced now at 4.5 to 5.5%. And that's going to cost the US taxpayer and the government huge amounts of money. So what Donald wants to do is reduce interest rates, which will hopefully bring down the yield on the bonds. May not actually, because there's a whole load of issues going on with the bond market and bond traders. But let's assume that lowering interest rates will bring down the yields on those bonds. And as a result, that will reduce the actual payments in terms of cost that the US government has to pay out to maintain those bonds. In addition to that, by reducing the interest payments, automatically you're going to have Joe Public, members of the US, or the regular citizen, civilian, will end up having lower costs on mortgages, housing, car loans, bank loans, credit cards, etc. So Donald Trump wants to specifically lower rates for multiples of reasons. So why isn't Jerome Powell lowering interest rates? Well, Jerome Powell and the Fed are insistent that they haven't seen the full effect of the tariffs and the trade war. In other words, they want to see at least 5 to 6 months of activity before they are convinced that inflation is not going to be affected upwards. And that's why the main reason is to lower rates maybe in September, which would give them 4 to 5 months of clarity, understanding how the market is reacting to the trade war and due to the trade tariffs that Donald Trump has applied to all of the global partners. Now, that is taking a risk because you're pushing the economy to the limits. And the more or the higher the cost of borrowing is, then the more restrictive it is on US industry in growing and getting going. And Jerome Powell is treading a fine line. In addition to that, Jerome Powell and the Fed are the only ones that are sensibly managing the economy and managing the Fed fund rates and the dollar. If Jerome Powell was to just acquiesce and follow what Donald Trump would be saying and doing, then the dollar would automatically collapse. So as much as they don't want a strong dollar, what the Fed want is they want to avoid a complete collapse of the US dollar. So there is sense and sensibility in the Fed. They're not as bad as Donald Trump made out, even though sometimes we would want them to be ahead of the curve as opposed to behind the curve. But some of the statements Donald Trump is making are just pure headlines and they've got no substance to them or fact to them. And therefore, you take someone as bright and intelligent as Jerome Powell, and you can see he's not a politician, he's not going to react to Donald Trump in the same way as another politician would react if those statements were directed at him. Where is the US economy going? Well, with huge amount of foreign investment coming in, numbers of $15.5 trillion at least of foreign investment, the highest level of foreign overseas investment ever in the UK, in the US, wouldn't say the UK, ever in the US, no one's going to invest in the UK, but in the US, then you've got significant economic growth lining up ahead in 2026, 2027, 2028. And that's going to push financial markets to an all-time high. And where Trump wants to invest that overseas investments, what he's looking to do is develop AI and bring industry back to the US. Is that a good move or is that a bad move? Well, it's debatable because they've got to compete with China and they've got to compete with Vietnam and other Cambodia and other cheap producing industrial nations. So the US has been on the decline industry-wise for the last 50 years, and to start revitalizing that industry is great. It has an advantage where you don't want to lose the know-how completely, but it could be 40 years too late. In other words, they could be so far behind that it doesn't matter how much investment they make, they're not going to catch up. However, Trump knows that a weak dollar will be, to his advantage, a major competitive tool to be used in the global economic move to industrialize and repower, reignite the US might. Now, a weak US dollar will make US goods cheaper, but the quality of those US goods is not particularly high, as we've seen in the car manufacturing, and we've seen also along durable goods. They're nowhere near as good as Japan, Germany, and as cheap as China and Vietnam. So to start being a major industrial leader could be a complete and utter waste of time. However, to keep the know-how within the US, that is something that is overall essential to give the US a chance of competing in the future. It's more like a decade-long program as opposed to a 2-year program, because to get the US industrial powerhouse moving will take a decade, and a decade of further investment either within or from overseas. And that's where Donald Trump is at. Now, in addition to that, the overseas investment will be used for AI and technology to keep, maintain, and move forward even faster, that the US is the #1 leader when it comes to technology, AI, and the development of the technological industry. And they want to maintain that focus, and that's why they're putting heavy emphasis on investing in technology to make sure that they maintain the lead over and above China and any other competitor that may come on the scene. So Trump's economy is going to be technology-led, it's going to be industry revitalizing, and it's going to be dollar-driven in terms of a lower dollar is going to drive customers to buy US goods. As regards interest rates, I don't see any interest rates coming down before September, then October, then November, but it won't be enough to please Trump, and he'll keep on putting pressure until he replaces Jerome Powell with someone like Howard Lutnick or one of his other individuals that he's got on the administration. This is Mayor Walensky of Driving Markets. You can download this podcast on your favorite platform, wherever you see fit. Have a good afternoon.